Good morning, I'm Greg Ninnis for interest.co.nz, and this morning I'm talking with Carmen Vicelich from Datainsight. Thanks for joining us, Carmen.
Thanks, Greg.
Datainsight, I know, provides valuation information about the property market to various commercial customers such as banks. Tell me a little bit about just what the company does.
Well, Datainsight was really born out of the need to deliver more. So we wanted to deliver more choice to the market, so amalgamate a series of data and more data sources than were available previously, and also deliver more technology and innovation to a market that really didn't have any.
Okay, so how would your clients, the banks or other financial institutions, what sort of information would they be getting from you, and how would they be using that?
There's really three parts that we deliver. We're using advanced analytics to provide information for them so they're empowered to have actionable insights, so understand what's the market doing, what does that mean to me, what does it mean for my growth, my risk, my strategy. And the second part is the data, so they now have a choice of data and a larger breadth of data. And the third is the technology. So through Velocity, they're actually able to provide superior customer service as well as risk and regulatory compliance.
Right. So basically you're analysing data from third-party sources and putting it in a format they can use. How detailed is that? What sort of information is it providing them with?
It's down to a household level, and it's really helping them to add value to their customer and add relevance. And I suppose in today's market where Apple is the number one brand in the world and everybody's online and connected, expectations of customers have changed, and they're really expecting banks and any service provider to really understand them, know them and be relevant and add value.
Yeah.
And the way we formatted the data and the way we provide it to our clients enables that. So they can actually, someone can walk into the bank and they can look at that property and make an advanced lending decision really quickly.
Right, so it would be giving them information about values.
Yeah, so we've built an automated valuation model called an iVal, and using a suite of data, so council data, mortgage data, real estate institute data for the first time, and conditional sales are feeding into that model, and so they have a really the most accurate view of what a property's worth. So they can balance actually helping the customer understand what that property's value is through the automated valuation model, or where they want to get a inspection and get a valuer, they can use the Velocity system to order a full valuation.
Okay. Now Velocity is what's called a valuation panel, is that right?
It's an ordering system, that's right.
Okay. How does a valuation panel work? What is it exactly?
So valuation ordering systems have been used globally for quite some time, and it's really best practice that two things happen. One is that the order is allocated to a valuer through a system, through a third party. And the second is that the order comes back in a PDF soft copy, so it can all be stored. And so Velocity is delivering those two things, but importantly it's delivering customer service. So instead of walking into the bank and the bank's like, well actually we need a full valuation, and sending you away to have to go and find a valuer that's local and go through that process, the bank's able to do that and streamline the whole lending decision and make it easier for the customer.
So basically, rather than the customer have to order a valuation when they're thinking of buying a property or extending their mortgage, the bank can order that valuation and it comes through automatically.
That's correct.
By email.
The customer gets a copy of the valuation through the system as well, and the bank gets a copy of it. And so they've got all that best practice and regulatory compliance. Then at the same time, they've taken that pain away for the customer having to go and do it themselves.
Okay. I believe this system is common in Australia. Is it universally used over there? Is this the way things are done there?
Oh, definitely. It's been there for quite some time and globally, and it's really been particularly the Australian-owned banks in New Zealand that have had to sort of catch up and follow that same process. Velocity, we're excited, is the first New Zealand-built system of its kind in New Zealand. Built for Kiwis, by Kiwis.
Very good. I believe one of the features of these types of systems is that there's anonymity. The valuers will sign up to this panel, as you call it, or ordering system, but the bank or whoever's ordering the valuation doesn't know who will be assigned the work. Is that correct?
That's correct, yes. So the system assigns the valuer based on the location that they work in. So the valuer, when he onboards himself through Velocity or herself, can actually say, these are the areas that I work in, this is the pricing, these are the property types, so whether it's apartments or lifestyle or a dwelling, and then the system based on that address will allocate it out randomly to a valuer.
And that's, I presume, to improve the integrity of the valuation process and prevent the sort of abuses we saw in the last apartment building boom, where some of the property spruikers had what you might call a tame valuer who did all of their valuations, and they were jacked up valuations that didn't really reflect the market, and people ended up paying too much for these investment properties, and of course then they suffered a big loss in value later on.
Exactly, Greg, that's correct. So it's really bringing in anonymity and avoiding any risk of collusion or third-party interference. So it's where it's a system that streamlines it, brings speed and efficiency, but also best practice, and global best practice is for random allocation. And
We already have one of these systems operating here before Velocity started up?
Yes, there was an Australian system that was localised here. There's many differences in what we're providing. One of them is that any valuer can be on the panel. So from day one, it's a nationwide panel, and we've been overwhelmed by the great support we've had from the valuation industry. The second is that how the lender sets up their panel is all through the system, so they can integrate their credit policy and their panel choices. And the third is the data that it delivers online. So there's access to data that hasn't been available before, utilising unconditional sales and that visibility of what the market's doing.
And I presume because you're accessing now the Real Estate Institute's figures, which come through as soon as a sale becomes unconditional, that information is coming through very quickly, and where you've got a market that's prices are going up very quickly in many areas, the market's evolving very quickly. If you waited until it's settled, you might not get that information for 2 or 3 months later.
That's very true, yes. And I always remember being at a credit and risk conference after the last GFC, and they had all the banks on a panel, and they asked them in hindsight vision, what do you wish you could have known, and what would you have done better? And they all said better information. The horses were bolting, and nobody wanted to be that guy that said, hey, hang on, I think we should slow down. And I always remember thinking, well, there's got to be more that you can do and better visibility, and this enables that. Having unconditional sales driving the automated valuation model of what a property's worth is the most, it saves 2 months waiting time for a settled sale, which in the case of a changing market can be 2 months too late. And so that's pretty exciting, being able to deliver that. One of the other firsts is that each bank and their lending process is quite different, and Velocity enables the bank to customise the solution and the system for how they want to choose the particular report. So it's fully customisable, cloud-based.
And are all the major banks operating in New Zealand now using this type of panel or ordering system for their valuations?
That's correct. All the large banks are, to varying degrees of mandatory versus non. So it's a journey.
Some of them are saying, we can order that for you, but if you want to go out to your own valuer and get a valuation, you can. And others are at the moment requiring it purely to be done through this system.
That's correct. It's a bit of a journey as to how they deliver that piece.
And I presume eventually you see it all migrating over to this valuation ordering system of one sort or another?
Yes, definitely. Already the majority are using it. So while they'll accept a valuation outside of the panel, it's not the norm. So definitely they'll follow the rest of the world in terms of actually that's the way to do it.
Pretty much we tend to follow the Australian lead here, don't we?
We do, yes, and we're catching up on that one.
There's a certain amount of inevitability to that.
There definitely is.
And how have the financial institutions reacted to you're coming onto the market? Are you getting good acceptance? Yes,
we've had tremendous acceptance, thanks Greg. It's been really exciting actually. I've worked with the banking industry for the last 12 years, so I understand a little bit of their pain points, and I think the market's really been hungry for choice. for some innovation and also the new technology that we're delivering. So that combination of data, expertise, technology and innovation has really helped us grow really quickly. So we've doubled in size every 6 months and experiencing some great growth.
Right, okay, fantastic. Well, look, thanks very much for joining us today,
Thanks
Carmen.
for having me, Greg.
Thanks for our readers watching this on interest.co.nz.